problem with him because I don't know how to say the thing of him. It's like I watched this video but I don't know how to say it. So remember last time you promised me 5,000, eh? If I say it right. Okay, wait. He's gonna give me 5K if I say that thing right. Okay guys, okay guys, as you all know me, as your boy, I think I'm already wrong, eh? Huh? Hey, sorry my boss. Okay, the floor is yours.
Next time. Okay guys, as you all know me, as a mentor, Nasdaq Ninja. So guys, today I'm gonna be talking about technical analysis, but I won't spend more time, guys. If you want to check how I actually trade, most of the time you can check it on YouTube. You know guys, YouTube is for free and then YouTube will pay us at the end of the day if you guys check those videos. So you can do that. So yeah, one of the most things that I like trading into the market is zones. I like trading what I call zones. You know, in the market there is no a secret that you will find. You know, obviously you guys want us to teach you something like 2-minute strategy. You know, in the past we were taught 1-minute strategy, only to find out there's no a thing called 1-minute strategy over time. Understand? So in the market, the most important time, it's your hard work. You know, the work that you put in is the one that is going to give you the results at the end of the day, you know. And you know, the real reason they call a memory card is because it's like a memory, it keeps the information inside it, you know. But remember, we have 1 gigabyte, 1 terabyte, you know. All of us, we don't know how our brain information can actually put in, you understand? But at the end of the day, what I'm trying to say is the more information you put into your brain, the more confused you're gonna be. So it's always important for you to keep less information in order for you to not get confused by a lot of information, you know. Basically, when I started trading, I learned technical analysis. Over time, I learned indicators, which was A45 strategy, whatever, Bollinger Bands. Over time, you know, I kept on adding strategies only to find the first strategy that I had was the most perfect one. So I realized that the more information you have, the more confused you become. So it's always important for you to study one information. Like Tumelo JPY said, the problem is not the strategy, the problem is yourself. So it's always important for you to, you know, don't always change the strategy because you took one loss. At least take 100 losses, then you can change the strategy. You know, you find you are blaming the strategy. You know, as us, most of us, we like blaming a certain thing, you know. If you take a loss, you're gonna blame my signals, but you know, on that same signal, I made capital. You didn't make capital because you wanted to make. Let me give you guys a perfect example. Let's say you wanted to make 5K. I wanted to make 1K. I made 1K and I closed. Then you're still holding because you want to make 5K. When you blow, I'm going to become the blame. That John, your signal was wrong and whatever. But you forgot what was your target. You know, you're not gonna put in mind that I was aiming for a higher target. But remember, once you open a trade into the market, you are already on the risk. So yeah. I'm going to talk about support and resistance zones. You know, most of the people like saying support and resistance doesn't work. For me, I always say, please draw the support and resistance for me so I can see if it doesn't work, because I always find the problem of how people really draw it and how people really explain it, you understand? So, and how people, once it touches the support, they wanna enter. Once it touches the resistance, they wanna enter as well. But me, it's one of the perfect, I can say, strategy that I've been using over years, and it's working for me, you know. So, rule one, broken support becomes resistant and vice versa. So, it's always important for us to understand that with support and resistance, I think the name, you can just say, it becomes temporary until a certain thing happens. If you have a resistance, it gets broken, then that becomes your support. But like I said, it depends on which time frame you're really using it. You know, you can't create a support on 1 minute time frame and think it's going to be the strongest, understand? So I like creating zones on higher time frames because I know they once created a movement, and when the market touches again, they'll create again another movement. Let's jump into another point. So we have supply and demand. So when it comes to supply and demand, most of us we like defining supply and demands and support and resistance as the same thing, and they are two different things, you know. For me, with my definition, I always say support and resistance is where the market actually reverses, but supply and demand is where the market makes the big movement. So the market can reverse because of resistance, but when it touches your supply, it makes the biggest movement. So it's always important for us to understand that supply is more respected than resistance, because resistance, the market can reverse but take a lot of days for it to move to a certain direction. But if it's on a supply, that's when it will make the biggest movement. That is why others, they compare them. I don't compare them. I make them work together, you understand? So supply areas of selling pressure, demand are areas of buying interest. You understand? So that is why I say that's where you get a lot of, let's say if it touches our demand, the buy that you're gonna get there, it will be incredible, you understand? So let's jump into another chapter. We have our trend lines. Others, they don't use trend lines, but I definitely have discovered that every strategy has a trend, you know. So the problem is the lines. I think that is the problem, because once I start drawing the lines, then I'll be defined as a trend line trader. But you know, we have SMC, they use a trend where they have POS and what is this, change of character. So us, we have high lows and lower lows. I think those are the same thing. The problem is us, we create a trend line there. So once you start creating a trend line, then they say trend lines don't work, but we are all using the same thing. The only thing that is different there is just the names. And you know, obviously if I want to do the best marketing, if I can just create a strategy, just a ninja way strategy, even though I'm still drawing a trend line, I'm no longer calling that trend line as a trend line. I'd be like diagonal support and diagonal resistance. I'm gonna make more money than me calling it pure price action, because someone already sold pure price action 10 years back and he made billions or millions. So I think that is the way new strategies come, because people create strategies to just monetize, you understand? But it's still the same thing, you understand? So let me jump into another. So here I'm going to talk about the market structure. So when we talk about the market structure, it's very important for us to understand that when you build a house, you can never build a house from a roof. You always have to start from foundation. You know, you can't start building a house with the roof. So when you get to the market, when you analyze, you can't just get into the market and enter a trade. Basically, there's basics that you need to start in order for you to get a perfect entry point. You understand? So that is why we say it's a market structure. So with the market structure is, I like putting it in the easiest way and say ABCD strategy. Let me quickly show you this. So when I say the ABCD strategy, it's like if you are at a certain point and you understand that the market have already created this phase, what is it that the market will create next? I think the only thing that we have that is a problem as us traders is not knowing what the market will create next. And once we don't know that, then it be, because I really understood how to trade technical, how to enter and whatever, but I always blew an account and I always ask myself what went wrong, what is it that I wasn't doing correct. At the end, I started understanding that the only problem is I don't understand the structure of the market. So when I talk about a structure, like I said, you can never start building a house from the roof. Obviously, you need to start from the foundation. So I'm just going to do this. So in the market, we have what we call, I like calling it ABCD. So I just say ABCD strategy. So if the market moves from this point and then it goes to the top side, it's obvious case that if you get it on the resistance, we're going to have something that we call sells. The market will sell from this point and come to the bottom side. If you find the market at this certain point, where will the market go? It will go up. You know, yes, with the explanation, it's easy to say that, but for you to get the entry point there, it's going to be difficult. So, and then the next thing, it goes to the top side. After when it's at the top, it will do what? Go to the bottom side. So this is the structure of the market. It's actually you understanding what will the market do in the other side. Understand what's coming next. So the other thing that I like talking about is AMD strategy, which is accumulation, manipulation, distribution. So if the market is at a certain place whereby it plays around here, it creates a consolidation, the next thing that will follow, we know very well that will be manipulation. So let's say you find the market already manipulated. What is it that is going to happen? Obviously, let's say you have your A and then you have your B here. Then what's left is C. So when you find your market like this, you know definitely that what it has to happen next is your distribution. So now you start looking forward for buying opportunities. I always say there's always reverses on a zone. Like I said, this is the most thing that I use. There is no way to want to reverse on a zone. If you can just go to a time frame and go furthermore to a weekly, monthly, you're gonna find where the market have reversed and make a bigger movement. There was a zone in the past. Understand? I like the fact that they always say if you drawn your support in 2007, when we get into your chart today, we have to see that support, because that support in the future will be respected, especially on currencies. If you can go there, you find something that happened in 2002 is being respected today in 2025. So that's possible. So from here, we know that from here, that's when the market will do a shoot up. So if you say this is your A, you get into the market, you find A, you know already that B will happen. Then that's why maybe you look for a selling opportunity just to get a quick scalp. And then now you know that your C has to happen. That's why you get your buying opportunities, you understand? So now I'm going to jump into the last part, and then I'm going to give others a chance. So like I said, guys, if you want to learn more, you can just use my YouTube channel, and then I provide free learning things there. So yeah, let's jump into the other. So here I'm gonna just pass because I think there's another one's topic. I'm gonna go for, yeah, let's talk about our liquidity zone. So in most cases, when it comes to liquidity zones, is basically I've been trading support and resistance for too long, only to realize maybe this year that there's a lot of things that I've been doing incorrect. I always fought for that sniper entry. Yeah, some of them I got, but most of them I didn't catch. So I realized that no, sniper entries is the one that is incorrect. Is the one that really incorrect. We can't always fight for sniper entries. We need to fight for obviously, let's say you want to fight for a sniper entries. When the market touches a zone, you enter full margin. You have 90% chances of blowing. So it's always important for you to wait for a confirmation, then you enter your trade. So let me quickly go for my trading view here, and then jump in. I just want to show you guys the zones here. So like I said, when I analyze, I always start from a highly time frame, so I can go for 1 week, and then from my weekly time frame, I'll get my zones. So let's say this is the first zone that I actually choose. So if I can check, when did this zone become respected? It was respected in 2024, July. So this is 2025, May 19. So it became respected again in 2019. So obviously when I keep on going furthermore to my time frames, to the lowest point, I'll get that entry point on a perfect trade. But if I get it on the highest time frame, I know it's going to create the highest movement. It's obvious. So if you can check, it was respected again in 2024 December. And then the most perfect thing is it respecting it today. And then we come again here, we create a zone again here. If you can check, this one was actually respected in 2024 December and became respected 26 May, which was last week. So why do I actually like zones? Is because when it comes to zones, it's more, if it touches a zone, I know it has a higher chances of me getting the trade right. So obviously I said I'm going to speak about sniper entries. Definitely if here you are looking for a sniper entry, you could have caught your perfect sniper entry on the third attempt. But what about the second attempt? On the second attempt, it could have taken you out. But if you could have waited for the market to take people out, which called fake out liquidity, fake breakouts, you could have got the most perfect entry when it comes back to the top. So it's very important for you sometimes to just let the market touches, and then when it comes back, that's where you get your entry point. But on the third attempt, that's you there catching your perfect entry because it just tapped, you hit your sniper entry, the next thing you just relax. But on the fourth attempt, the market did what? It took people out again. So obviously, this could be your loss if you just wanted to enter immediately, and this could be your loss again. So it's very important for you, once it touches, you jump in and then you let the market move. So this is your zones. These are your zones again. So when you get there, you're just looking for places whereby the market once created the highest movement, and then you execute your trade. That's it. So you can only trade using zone. I'm confidently saying that you can trade without even creating a lot of things. Just you creating zones, you can actually get perfect trades, and you need to respect them. If the zones, the market moves zones to zone. If it moves from this zone and then it goes to another zone, it's going to just be a zone to zone. If you can check, whatever that I'm creating here is the zone. The market once created a bigger movement here, and then it became again here, created the biggest movement. And the way it's so smart in the future, you see, it started by taking people out. It's smart. That's liquidity. So it's always important for you to wait for you to do that, and then once it takes people out, you jump in. So I always say whatever that happened in the past will happen in the future, bigger and better. So if the movement here moved, let me quickly check. You see here it moved and then reversed here. When it comes back in the future, it will be way better than that, but they won't just touch and move. They might take you out. So guys, I think I'll end here, guys. If you want to see more videos me teaching, you can actually subscribe to my YouTube channel, Nasdaq Ninja. I teach from a beginner to advanced. Yeah. So yeah, thank you guys.